Welcome to a new episode of IGCSE with Jiaqi. Without further ado, let's start to discuss this economics paper 1 question. Question 1. A consumer has $10 to spend. A meal costs $9 and a drink costs $5. What would describe the situation if the consumer did not have enough money to purchase both the meal and the drink? Did not have enough money. So this is the concept of unlimited wants and limited resources. This forms scarcity, which is the basic economic problem. So the answer is D. Question 2. The diagram shows the production possibility curve for a country. The country moved from position X to position Y on the PPC. What is the most likely region for this change? So first, you need to know what is the difference between capital goods and consumer goods. Capital goods are the goods that are used to produce other goods and services. For example, it can be machinery. And consumer goods are goods that are consumed by consumers. For example, food and drink. So when X moves to Y, this means that more resources are allocated to consumers, such as producing higher quality goods. So this can increase living standards. So the answer is C. The government has brought about an increase in living standards. So why A, B, and D are not the answers? Because first one, investment in technology, this will shift the PPC outwards. B also will shift the PPC outwards. And D is also the same. Okay, next. Which type of factor of production is a railway track? First one, capital. Capital is man-made goods, so it can include infrastructure, machineries. So railway track is one of the example of capital. Yeah, this is the answer. And enterprise and labor, they are definitely not the answer. And land is regarding the natural resources, so wrong. Question 4. Which statement must be correct if a market is in a disequilibrium? So market disequilibrium happens when the quantity demanded of a product is not equal to the quantity supplied of a product. So there is a shortage or surplus. Not equals to quantity supply. So there's a shortage and surplus. This one means surplus, excess supply, and shortage means excess demand. So D is the answer. Move on. What is the determinant of price elastic of demand, PED? Determinant of PED. A. Availability of stocks of the product. No, this affects PES, price elastic of supply, not PED. Change in the income of consumers. Oh, this one is tricky, but this one is also wrong because it should be the proportion of consumers' income spent on a product, which is not related to the change in income. And C, degree of necessity of the product. Yes, this is correct because, let me explain. When there's low PED, there's an example is like food, because the product is a necessity. So even if the price increases largely, consumers still need to buy. However, if there's a high PED product, for example, luxury bags, it's not a must for the consumers to buy. So C is correct. It's the degree of necessity. This affects PED. And D, existence of monopoly, it doesn't relate it to the question. Question 6. What would cause supply curve for an agricultural product to shift to the right? When we say supply curve shift to the right, it means there's two things you need to consider. It is a non-price factor and shift to the right means increase in supply. First one, an increase in the cost of production. No, this will reduce supply. B, also wrong because this affects demand, not supply. Okay, an increase in the price of good. No, because this one is a non-price factor. If it affects the price, it usually is extension. We will see the word extension or contraction. It's not shifting. And last one, increase in the productivity of farms. Yes, this one will increase supply. And it's a non-price factor. So the answer is D. 7. What would increase the price elasticity of supply, PES, of a product? So this means that more price elastic. What would make a product more price elastic? So there's a mnemonics I always use for me to remember, which is FEAS. Factor substitution, inventory level, factor substitution, inventory level, spare capacity, and time. So any of these four factors increase, it will increase the price, it will increase the PES. So this is the relationship. Either one increase will increase PES. So we can choose from here. So first one, no, no. This one also no. Yeah, you can see, oh, time a product can be stored. Yes, so this is the answer, D. If you're wondering what is factor substitution, it means that how fast a firm can change from using like a labor to a machinery. So like how fast it can change between one factor of production to another. Let's move on. Question 8. The diagram shows the demand curve. What does movement from X to Y show? X to Y. So we draw an arrow. Okay. So we can see that the quantity reduced when it moved from X to Y and the price increased. So let's see. A decrease in quantity demanded due to an increase in price. So yeah, this one is correct. So A is the answer. So yeah, this one is what I mentioned just now. This is the price factor. So this movement is a contraction. Move on to 9. In the market, there is a surplus of a good. Surplus of a good means that there's more excess supply. So basically, supply more than demand. So I would suggest you to draw out the diagram so that you can visualize what happened. So this is price in equilibrium and this is quantity in equilibrium. So when we say excess supply, this one is the excess supply. This is the quantity demanded and this is quantity supplied. So this part is the excess supply. Is the surplus. So this is when we have an excess supply. So the question is asking what change would cause the market to come to an equilibrium? What would back to an equilibrium? So now this price already in price 1, which is like higher. So you need to reduce the price in order to increase demand to back to equilibrium. So the answer is B, fall in price to increase demand and back to equilibrium. Okay. Question 10. When the price of good is $10, the quantity demanded is 100 units per day. Which combination of price change and price elasticity of demand will cause the largest increase in the quantity demanded for the good? Largest increase. So when we say largest increase, which is mean that it is more price elastic. And what is the value of price elastic? The PED is bigger than 1 or -1. So I'll put like that. 1. Okay. And when we say increase in demand, it means that when you reduce the price, quantity demanded will increase. Okay, this is the 3 piece of information that we need to know in order to answer this question. So first one we already can know. It needs to be bigger than 1, so the answer is not this one. So we eliminate A and C. Let's see the price change. When we say want to increase the quantity demanded, you need to reduce the price, so it's definitely this. Price falls to $9. The answer is B. So let's move on to 11. A function of money is to act as the measure of value. What does this mean? Money can measure market value of different goods, so we can compare the value of each goods. Yeah, so it's B, definitely. 12. In 2008 to 2009, the Central Bank of a developed country reduced interest rates from 5% to 0.5% per year to stimulate the economy. How would this policy have affected the amount saved and the cost of borrowing by individuals? Okay, so when you reduce interest rate, you will reduce saving and increase borrowing. However, this is very tricky. This one we know is decrease, but this question, look properly, it says cost of borrowing. So if you didn't look, you may choose B, but actually the answer is when you increase, why would people increase borrowing? It's because the borrowing costs reduce because they need to repay less interest rate. So the cost of borrowing actually decrease. So the answer is A. Move on to 13. Many small energy providers have closed down due to the rising costs. What is the likely effect of this on the price of energy and the choice of energy providers for consumers, assuming there's no government intervention? So first one, this piece of information tells us that when the supplier closed down, supply reduce. So choice reduce. First one we can deduce first, and then the second one we need to draw a diagram to better visualize it. This quantity supply and this is the price. So okay, when supply reduce, what happens? Its supply curve move to the left. So you can draw now. So what happens? Price increase and quantity supply reduces. So we can deduce the answer where price of energy increases because this shows us Okay, move on to next question. What is the most likely goal of state-owned enterprise providing health services? So state-owned enterprise means government. Government, what's the goal of government? It's to maximize social benefits. So we see which answer is the most close to this one. Yeah, public satisfaction. Profit is no. Profit is for private firms. And these three goals are for private firms. Question 15. Some governments allow monopoly markets to exist. What is a reason for this? Okay. A. To attract entry into the market. No. Because monopoly usually sets high barriers of entry for competitors to enter the market. And B. To fund research and development. Yes. Because monopoly holds all the market shares and it's usually big company. So they have the resources and capital to do research and development. And oftentimes private firms do it more efficiently, so government does not need to spend money to do this. Yeah, so this one is correct. C. To increase prices for consumers. No, definitely not. To maximize monopoly profits. No also. Yeah, so answer is B. Question 16. The table shows the costs incurred by a firm producing computers. What are the fixed costs if 3,000 computers are produced? So, fixed cost is a cost that needs to be paid regardless of how many outputs you are produced. So this means that even if your output is 0, you still need to pay the cost. So this gives a big hint. You just look for the 0 output. So this cost, there's no variable cost in output 0, so the total cost is equals to the fixed cost, which is 20,000. So the answer is A. Question 17. A government increases its revenue by higher direct taxation of both personal incomes and company profits. What is the most likely to be the reason for this increase? So to control spending on specific consumer goods, no. Encourage business investment, actually no, because this will discourage. Yeah, too high. If the tax rate is too high, it will discourage business investment. Provide public and merit goods, yes, because usually government raise tax revenue to fund for public welfares. So this one is correct. To reduce pollution, no, not relevant. Okay, move on to 18. Income tax in a country gives all individuals an initial tax-free income allowance. Any income above this allowance is taxed at increasing rates as the incomes of individuals rise. Which change to this income tax will be regressive? We look at A. Decreasing the lowest rate of tax, no. B. Decreasing the tax-free income allowance. Yes, because it means that when you decrease the tax-free income allowance, it means that lower income group also need to pay tax, so it will be regressive. So I give you an example to better visualize it. For example, your annual income, and we say the boundary of this tax-free income allowance decrease from 40k to 30k. So right now 60k we need to tax, 50k also has tax, 40k initially it doesn't have tax, but after you reduce the tax-free income allowance, now the 40k income earners will need to pay tax. So this we can find that this income tax scheme has become more regressive. Okay, move on to question 19. A government lowers the rate of interest. Who is most likely to be disadvantaged by this policy? So when you reduce the interest rate, it's definitely the savers, because they earn less interest if they keep savings in the bank. So it's is D for question 19. What is a supply side policy measure? This one no, B no, and C no. Actually, for B, the correction will be a reduce in direct taxes. So this can create an incentive for firms to expand their business and also workers to work. So D is correct, because this is the removal of barriers to entry to a market is deregulation, which is a type of supply side policy. 21. What is the most likely consequence of economic growth? A. More equal income distribution. No, because when the economic growth, there is a chance that the rich becomes richer, poor becomes poorer. And then B is more use of resources. Yes, it's correct. Because now when the economic growth increase, more people are employed. This increase the productive potential, so more use of resources, correct. Reduce imports and reduce tax revenue, these are not related. 22. In high-income economies, cereal farming is highly productive, but few workers are employed. What could have caused this employment situation? Right now, more farmers, they use machines because machines work more efficiently than workers. So C is correct. Increasing use of mechanization can increase productivity. Answer is C. Question 23. Who is most likely to benefit during a period of inflation? So what result in inflation? Actually is fall in real value of money. So when we say fall in real value of money, who benefits the most? Actually, we think about it, it's actually the borrowers, because when inflation, their real value of their debts fall, so they can actually repay less than what they have borrowed. So borrowers are benefit from this inflation. Fixed income earners no, because the real value of their income falls, and creditors, lenders, they will also receive less money due to inflation. 24. The table shows some economics indicators. Which increase in the first indicator is most likely to lead to an increase in the second indicator? So, increase and increase. If you increase this, budget surplus, which means tax revenue is more than expenditure. No, this won't result in increase in consumer saving, because higher tax revenue means that consumers, they pay higher tax, so they may not save as much. And B, increase in consumer spending will increase unemployment. This has no relationship. Increase in inflation, increase trade surplus. No, it's not a direct relationship. D, increase in productivity will increase living standards. Yes, because increase in productivity, you can produce like higher quality goods, so you can increase the standard of living. Okay, so the answer is D. Which combination would be most likely to increase the population of a country? So definitely birth rate needs to be high, death rate needs to be low. But how about net immigration? Net immigration means that people move in minus people move out of the country. So it needs to be positive to increase the population. So yeah, This one is positive. High, low, positive. The answer is B for 25. Question 26. Which economic consequence is most likely to result from an increasing proportion of the population being over age of 65? So this situation is an increase in aging population. This means that the government will need to increase the allocation of resources in healthcare and pension funds. So yeah, A will be relevant. Government transfer payment will increase. Transfer payment means that it is a type of benefit payment government gives to people in need. So A is correct. What is most likely to encourage international specialization? Similarities in climate in different countries? No. The ability to produce products more cheaply than other countries? Yes, because this one, it gives the cost advantage to the country that has international specialization, so the country can export more and earn higher revenue. B is the answer. 28. Country establish free trade agreements with other nations. What would be the intended benefit of such agreements to country X? So free trade means that there are no barriers and no any protectionist measures in international trade, such as no tariff, no embargo, and import quota. So what's the benefits of no barrier? So definitely the country can trade freely, which leads to more efficient allocation of resources. So C is the answer. 29. A country's foreign exchange rate appreciates significantly. Which group in the country will directly benefit from this change? So when we take US dollar for example, so when dollar increases, then import will increase. Why? Because import becomes cheaper, and at the same time export will reduce, because other countries will find that it's too expensive to buy US goods, so they buy less US goods from US. Yeah. So this is the relationship, and we see which one is the most relevant. A government department which only buys locally made goods. No, it doesn't affect. B, retailers who get all their supplies from foreign producers. Yes, because we say that import is cheaper. So definitely you can buy maybe cheaper raw materials from other countries. So this one is correct. C, workers in local companies that compete with foreign firms in the local market. No. D, workers in local companies that sell only in foreign countries. This one, no, they won't be benefited because export has become more expensive. So the answer is B. Last question. What is measured in the secondary income balance in a country's current account of the balance of payment? Secondary income, the definition of it is the net income transfer between residents and non-residents. So which one is the most relevant one? Yeah, it's definitely A. And no, B is wrong. C and D, net foreign investment flows and the net inflow of income from factor of production abroad. This is so-called the primary income, also known as investment income. Okay, so here is the end of the paper. Hope this video helps you guys. Comment down below which paper you want me to solve, and I will see you guys in the next video.